How's it going, everybody? Brian Hoops here with Midwest Market Solutions, our Market Insider TV closing commentary on Thursday, August the 16th. Pretty newsworthy day, as very close to reaching agreement between the U.S. and Mexico, which would give us a lot more exports of our pork products into Mexico, the number one buyer. That's what got into the hog market here this morning. Gap higher on the opening, closing. Notice limit up, $3 limit in October. December even more bullish. We closed above major resistance here that we identified in previous commentaries. Again, closing $3 limit. We'll have expanded limits. There'll be 450 points tomorrow. The markets always trade fear before fact. And the fact is there's no agreements reached with Mexico. In fact, nothing reached with China either. But that doesn't mean that there won't be something. And the market's anticipating that we'll get some sort of agreement reached, and that has the funds who are holding big short positions very nervous, and we're seeing some short covering as a result. So bullish reversal here back on August 9th. Technically, that encouraged some short covering, and now we're seeing gap higher and limit up. So we should open higher again tomorrow. Not much in the way of cattle activity today. A little bit higher close, but basically unchanged inside days. Continuing to hold this uptrend line support. No cash cattle trade yet. There's some bids out there around 108. Asking prices 112 to 113. Once again, a very late week type standoff. In the soybeans, strong technical action, bullish outside reversal, and a rally here today. Nearly 28-cent gains on the session. Comes on the news that China is coming to the United States. A delegation of Chinese representatives, to be more accurate, coming to the United States to discuss trade agreements and lifting the tariffs. And this is exactly what we need to give us higher prices. So we're running into resistance. In fact, there's a little technical downtrend resistance in here that comes, well, maybe around 908 or so. And if we can get above that, that's above a downtrend line, I think that would be friendly here for the market, especially if we get to this 920 as our next resistance point. Now, some commentators will note that even if we start adding in Chinese production, it would drop our ending stocks from 785 to maybe 585, 200 million bushels of export activity to China. I think if we actually reach an agreement, it's going to be much more than that. It's going to be all type of new territory as far as agreements of export business that we agree to with China. And we're going to see a massive amounts of soybeans that in an agreement here because of the trade imbalance. It's going to have to be more than what they've been doing previously. It's going to be much more. But that's just my opinion. And that, I think, is a reason why we've been saying do not sell soybeans in the next 6 months unless we reach an agreement. The fundamentals will change so quickly, so dramatically, once an agreement is reached, that prices are going to go from this 875 maybe back up into this 1025, 1075 range, somewhere back up in here. That's where we would be looking to make sales. So definitely don't look at doing anything in this area. The corn was a follower today, but did end 4 cents higher. We got resistance just above the market, similar to the soybeans. And wheat futures, looking at Kansas City here, had a decent day. We bounced off of some support here that we identified. It doesn't look like much. It was 12-cent gains, but we're a long ways off of our highs. If we could get back to this 590 area, there's probably a place where producers start laying off some risk and making some sales. But we'll keep you updated as information develops. Had some export business and weekly sales, all positive, supportive to these grains. Have a great night. We'll be back in the morning with our daily newsletter, our opening video, and our trade update will be out tonight. Have a good night. Talk to you soon.